This is Charles, and today we are going to talk about the financial statement, the list of income and expenses. The questions that we have here is what incomes to write down on the financial statement, what expenses to show to the lender, how much positive cash flow to show. And again, you have a down this video, below this video, you have a copy of the template, Microsoft Excel format. Make sure you download it and make the changes to fit your unique situation. Okay, uh, this is a simple excuse me. This is a simple financial statement that you have the copy there, and you would like to write the loan number. This is very important. The loan number, your address, the borrower, co-borrower. This is a simple. This is a guide that I wanted to show you to explain the numbers for the income and expenses. Now, each lender or your lender may have their own format, their own form that they will send it to you by mail or by fax or by email as well. Or some lenders are able to download this form on the website, like Homecomings or Aurora Loans. Okay, here is you have the income for the borrower, and here the income for the co-borrower, and here you have all the possible incomes, and here all the possible incomes for the co-borrower. And now let's move on to the expenses. Okay, here it's a list of the expenses, this list and this list. Now let's analyze this a little bit. Your mortgage payment, first mortgage, if you have any second mortgage or HELOC, your payment goes here. Your taxes and the home insurance. Now these taxes is calculated, you add up your whole 1 year, your annual property taxes, and you divide it by 12. And here you have your annual home insurance, and you divide it by 12. Now why am I writing this here? Because if you don't have escrow on your first mortgage payment, escrow meaning if your taxes and insurance is not included in your first mortgage payment, let's say 1770, the new loan modification approval will include the taxes and the insurance in the new payment. What do I mean with this? So let's say this would be your principal and interest, this will be your taxes, this your insurance. So your payment all together will be 2227. However, let's say hopefully if you get an approval for 1200 payment per month, that will include $365 and $92 for the insurance. So this will make a new total for $1,657, as you can see here, if you cannot see there. So what I'm trying to explain here is your new payment will include taxes and insurance. It will make a new total. I hope you understood this. I believe you understood this item. Okay. If you have any car payments, any credit card payments, just write the minimum payments that you have on the card. Any other loans, student loans, if you have medical bills, auto insurance, medical, child support, if you have to pay any child care, food, how much you spend for food per month, cell phone, your utilities. This adds up gas, electricity, water. If you pay trash every month, will be added here. Any repairs, any gasoline for the car will be here. Clothes, cable, entertainment. Now, little comment on these expenses altogether. For clothing, cable, and internet entertainment, you might want to keep a zero on these, because these are if you start adding all numbers, will increase the total expense amount here. So why is this total number important? So we have a total income of 4,000 between the 2,500 and the 1,500 of the co-borrower. We have 4,000. Now these expenses altogether, this line plus this line, should not be higher than the income. So the expenses should not be higher than the income. That's a very important thing you want to keep, since they are going, if the expenses is higher than the income, they will deny your loan map. Again, if the expenses is higher than the income, they will deny, they will disapprove the loan map. So the ratio that you want to keep here is leave a monthly income just a little bit enough to cover your over your expenses. Here the ratio I worked out is 110%, so you have 10% more than this, than your expenses. 4,000 is 10% more than these expenses. Okay, so the ratio is 110%. Now this is not set in stone, so you can work around these numbers. However, the most important thing is that you want to keep your expenses below or equal to your income. Okay, then here's the last part, is the assets and the assets of the co-borrower. Now here I wrote down a checking account balance and retirement funds. uh, one key point that you want to keep in mind is that everything you write down here, the bank is going to ask for proof, bank statements, any 401k statements. Now, if you don't write it down here, they will not ask for. If you show that you have money, they will ask for an upfront payment for 1,200 or 1,500. So be careful on what you're writing here. Again, also with the expenses, my experience here, the expenses, my experience tells that your lender is not going to pull your credit report to compare how much you pay for credit card payments or auto loans, or whatever loans, other loans you have. So you want to play around these numbers to show just enough income, just enough expenses to to match your income. Okay, uh, um, I believe that was clear. And okay, again, that was all for today. Thank you for watching, and see you another day.